Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for August 21st, 2023. We are recording this at 1 p.m. Eastern Time, and this is episode number 399. So my name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have arranged for Michael Filighera to join us, as well as the option professor. And you should be seeing Michael's screen right now. And the option professor is here to moderate, so I'm going to go ahead and turn it over to him.
Okay, thanks, David, and thanks everybody for being here. I'm very excited about being here because the last time me and Michael got together, we had some pretty good insights that we shared with everybody, and we're going to do that again today. Just a quick thing is we are going to be sharing our opinions and our information with you, but we're not giving out specific advice to anybody. That's you go to your brokerage firm and find out your suitability and risk tolerance and take it from there. But we will share with you our ideas and opinions. Now, the last time we were here, which we'll get into in a moment, we did give some very good information about 4,600 area on the S&P, which in turn was extremely accurate. So we're hoping that today we can come up with something as accurate as that. Before we get started, though, Michael Filighera is going to give a little background, Mike, and explain, a little bit about what you do and, your background.
Sure. Good morning, good afternoon, everybody. My name is Michael Filighera, and I am the proprietor, trader, analyst with TradersHelpingTraders.com and also LogicalSignals.com. My trading history, I have been in the markets since 1979, and yes, I'm that old. I was started as an options market maker here in San Francisco. I have traded in San Francisco on their exchange here. I've traded on the London traded options market. I traded on the European Options Exchange in Amsterdam. And then I also traded on the Deutsche Terminbörse, which is in Germany. But that was my first walk into totally electronic trading. I came back to the United States in '97, relocated again here in San Francisco, and went back to the floor. When things all went electronic, I left the floor along with everybody else and came and set up here in my home, continued to trade options. And then in about 2013, I decided that just really wasn't cutting it for me anymore. And I decided that I was going to start day trading, which is what I do now. So I'm basically a day trader. I still would run some positions, and I'm considering re-entering and starting to do more in the options realm as well. But so far, basically just day trading the S&P and the NASDAQ.
Sounds great. And, Michael does a lot of work with the Elliott Wave, and I focus on RSI divergence, moving averages, and reversion to the mean. And the combination of what he looked at and what I looked at last time we got together was extremely accurate because we both saw that 4,600 area. Michael had a range of about 4,600 to 4,675 as a sell zone. And since we've dropped about 300 points out of that neighborhood, that was very, very accurate information that we were able to provide. And do you remember last time we met on this, Michael, and we went over that? And you had that range up there, and I was talking, yeah. So that really worked out for people who took that into their consideration. That's for sure, huh?
Good.
Yeah. Well, now I was going to say now I'll tell you what I have been noticing is the 4340 area, and I have some some indicators that are indicating that could be a neighborhood of support because if that does break, it does look like there's a big air pocket underneath. So are you seeing anything in and around 4340? And I think so far it's held up pretty good. Do you see anything around 4340 that would indicate that that could be a temporary low point at least?
I actually think it's 4350, which is the current low from Friday. And
okay, so that's pretty close. Yeah.
It is very close, actually. But my actual break point where I think that what they say, the sky's falling, Chicken Little running around, might be a little bit under 4,300, which does not diminish 4,340 because I think that is going to continue to provide some support. I have FIB support at 4,325. So in the larger picture, 43.40, 43.25, they're not that far apart. And particularly the way that the S&P has been moving lately, goes down there, touches it, and does a bounce. And that's pretty much what I would expect. So I think that we could get a bounce off of that level. And it might be a nice bounce, by the way. We get a more sustained several day type of a rally. But I think overall, the larger picture is now leaning very heavily towards the continuation of, on an Elliott basis, a primary C wave decline. Now, that goes into basically kind of against what a lot of people have been hearing, and a lot of people that followed narratives off of the different media sources. But I'm not really hearing from them if they're really changing their minds now that we're seeing this pounding taking place in the bond market, for example. We're seeing this threat that the dollar is going to continue to rally. We've got Jackson Hole this week. It's just amazing kind of what everybody's going to hang their hat on, because it always seems that everybody's waiting for additional information. Well, we need this information before we really can determine whether the market's going to continue to decline or should we start to buy again. Currently, if you're really looking at the NASDAQ, NVIDIA reports on Wednesday. And overnight, somebody just decided that they were going to start within the European time zone. And they just started buying the stock. And right now, the stock's up 25.
Yeah.
And that's up to last week.
It peaked at around 480. It peaked at about 485, came down to about 400. So now it's bouncing back up. But, if they have the monster earnings that people are talking about. But the thing that I was suspicious about is supercomputer SMCI is kind of connected to NVIDIA. And they announced earnings up 70% revenues, and they tanked afterwards. So it's hard to ascertain what the market is actually expecting. They could announce great earnings, and it could sell off like SMCI, or it could propel them into new highs, because a lot of people have raised their target to 534 on NVIDIA. So, and you go into that for the Labor Day holiday, and there seems to be some bid market sometimes before a holiday. You know what I mean?
Yeah. There's that.
So it could have a rise going into Labor Day,
because if you were an option dealer in NVIDIA, which I do see that there's always quite a few, and those are the big boys, the bigger players that are actually providing the markets for everybody to come into. Volatility, by the way, Jim, and I'll just kind of flip over and look at that real quick. Volatility is 127%. So it's up. It's up substantially today. So when I see the continued buying, I'm like, well, that makes sense to me. If I was a dealer, aka a market maker in the stock, I'd be looking to sell all these calls.
Yeah,
you sell the calls, you buy the stock, you wait.
Yeah.
Stock continues to go up, you buy the put and you're home free. So I see this happening.
There could be some short dated options and even zero DTE that could be interesting with NVIDIA based on how the news comes out on Thursday. Thursday comes out or Wednesday?
I actually saw this starting to build actually last week. I had thought that we saw the spike in volatility on what was expiring on last Friday, but then realizing no. And so actually, if we take a look, just to kind of say that the August 25th, which is this Friday, the 500 strike, the 500 level call is offered at $10.70 with the stock at 458. $10.70. So, and it's traded 18,777 contracts, so, to me, it's like, well, either all the longs already in, they're going hey, good enough for me, and they're getting out, or new money coming in because they think that's going to be after the earnings that we're going to pop 500, which it could, but again, there's no guarantee. And I feel what you just said about that other stock could hold extremely true. And I think it's because we get to a period of time where it's like, okay, folks, if you really believe that NVIDIA is going to carry everything else and it will never be sold, so therefore it'll just continue this rally till perpetuity, is not realistic. because
Yeah, it's
so
a classic reversion to the mean candidate, isn't it?
amen. Yes, and I
Yeah.
think there's
Well,
so
so
much
hey,
going
listen, so was
on.
Apple, and Microsoft, and they reverted.
Exactly, exactly, and they definitely, as are several other stocks. Right now,
Yeah.
it's catching a good bid, as is Tesla today. But we have to remember, Tesla really dropped. And we were thinking that Tesla was what, 215 on Friday.
Yeah.
So for it to bounce, but it catches a stronger bounce because somebody from a smaller firm, I think it was W.A. Baird or W. Baird, whatever their name is, came out and said, yeah, we're kind of bullish on the stock. Boom.
Yeah.
So whether it's short covering,
You know
whether what's actually going in, who knows? But
Yeah.
both of those are
Yeah.
catching a pretty strong bid today.
Can you put STRL up on the screen there? Because that's a success story I had last week where the RS was
TRL?
diverging when it, yeah, STRL.
Sterling Infrastructure.
It's called Sterling, right. And so you'll notice on your stuff, I'm sure as well, I don't have the screen in front of me, but I saw it go up and make a new high up around 83. And then the 80 puts were going for about 50 or 60 bucks expiring Friday. And I could see there was a divergence. And so those we targeted, and they ended up going to 500 bucks from 50 or 60 bucks. So that's an example of how it can work when it does work on a divergence on the RSI and a very short-term turn in the market, because it came down and hit my 12 SMA around 73.50 or something before it popped at the end of the day. So that's a good example. Can you see it on your screen, how it kind of rolled over there and made a nice sharp drop?
I absolutely could see it on my screen. Yeah, it did, and beautifully. It got up to 83,
Yeah.
83 3/8 about. Oh no, 83 and a half.
Exactly. And
then just
the
kinda
ones
went
off
kaboom.
the options on the ones at 80 that were expiring on that Friday. So obviously they were very risky, but they were very cheap. And if you can get a nice move down like we did down to 73, 74, that thing can go to $6 from 60 bucks. And
Right.
And that's an example of why we keep our that's why we keep our Periscope up on that kind of thing.
Yeah. And you may be doing the same thing again coming into NVIDIA.
Yeah,
So,
well, exactly. Again, NVIDIA is such an expensive stock; it's hard to get really cheap options like that. But an option around NVIDIA that would go from 3 to 25 is not bad either.
No. 50 cents to $6. That's a very sweet play. A very, very,
Oh,
very
yeah,
sweet
no doubt
play.
about it. And like I say, when you get these things that have big, big, big moves, obviously the volume does dry up at some point. And then, of course, if people who've made all that money, like they did in Apple, like they did Microsoft, people want to take profit at some point. And so when they do, those puts that are very, very cheap can turn around on you. Obviously, the risk is that they don't, but then the risk is limited at least, so you're going to lose whatever you lose. And if you are correct, the premium expansion is dramatic.
I just think that's like with the amount of interest in a lot of the options trading, with the Reddit crowd, with all the other groups that kind of come in and they force moves and they force things. I see a lot of that maybe tapering off, capping off, whatever the situation might be. But when they make a generalized move back in, it's surprised. It's a kind of on the same thing. We'll go to the other side of the coin. We see interest rates really taking, bond prices really taking a nosedive this morning or today.
Sure.
And so what do? They go after Goldman Sachs. Goldman Sachs, JP Morgan.
Yeah.
Oh, they're not going to make any money because look at the rates. And it's like, well, normally if the rates are going up, they're going to make more money because they get to charge more. I don't know. So, but in any case, that's just kind of the knee-jerk type of a thing.
This will hurt M&A.
So
this will hurt M&A because the cost of financing is high, right? The M&A activity might dry up because the cost of putting it together.
Yeah. But it's a knee-jerk reaction because you're doing based on something that may or may not happen. It's the same thing with when you walk in and you're buying NVIDIA because, hey.
Yeah. The phrase from Buffett that interest rates are like gravity to asset prices, I just don't forget that. And so, I just think, there's a lot of risk in asset prices, be it real estate or stock or anything else. The longer rates are high because, like he was saying, it is gravity to assets. That's why there was no gravity for 10 years. And what did assets do? So it's I don't want to forget that, you know, just because something didn't happen last night doesn't mean it's not happening.
I agree.
So things take time.
With that statement. And the one
Hey,
thing
how-
that
how-
I've always talked about. Go ahead. We're going to go
I
somewhere.
was going to wonder
You just
if
said.
on the bounce back up on the S&P, would 4460 where it kind of broke from be kind of a neighborhood of resistance?
It is very well stated. Let me go down just a little bit. Now I have a very, very detailed Elliott count that people can now see. And
Okay, good.
what we're stair stepping our way lower at the moment, Jim. And if we just have a little bit of understanding that we're inside of a third wave, and that third wave is subdividing 1, 2, 3, has subdivided 3 times thus far. So what that suggests is like, well, we've got 2 more 4 and 5s to do. So in other words, it's like we did 1, 2, 3, and then we did the first 4 and 5, and now we're doing the next. It did 4 up, and now we're doing the next 5 down, and then we'll do another wave 4 up, and then we'll do another wave 5 down to complete the third wave sequence. It actually started up at 45.44. So in my opinion, although we might go up one more time and get above it, it's kind of questionable, but we will see. But we peaked this time at about 44.08 this morning.
Oh, we did, okay.
Which I think completed another fourth wave. Now the larger one that I'd be looking for, once we get down, maybe like I said, like that 43.26 area, or you had mentioned 43.40. That's also a high candidate, so can't discount it. Then I'd be running fibs from, and let's just kind of take a look. This is all totally a guesstimate here, folks, because we don't have that low in place. But let's just say we get down to that 40 level. And I'm just going to stick it right there. Then if we're just looking for a normal coming back, well, actually, if it goes all the way down to that 43.40, the rebound would take us 44.20 to 44.43. 44.60 is in there, but it would be pretty big. It would be a push.
That's the best case scenario.
In my estimation. Yeah. So
it does look like also the small caps look like they've kind of given up the boat a little bit. IWM.
Yes, and let me get rid of that. If I can go over, I will show everybody something within IWM. I need to pull it up into my daily chart. You've heard me speak so often about a larger primary B wave counter trend rally that really has been in play since the October 2022 lows. And so that also is in existence with IWM, which did hit its low at 162.91 or 162.90, but that would be back in June of 2022. And then from that point, we've been off in a triangle pattern, and that triangle pattern is going to form for the primary B wave. And that completed, in my estimation, back at the end of July. So we've been declining out of this triangle, but it's now on the weekly chart. So it's entering its 4th week of pulling out of this triangle. So we had 3 solid weeks of down market here in IWM, and now beginning the 4th in that same fashion. And I would think that we're probably going to get closer to 170 before we see more of a rebound, but not a rebound that's going to take us back above 200. I think that that part
200 is the end of the game there, because the 195 level failed. Let's talk a couple about because
it's not permanent.
No,
I was just saying it's not permanent. I think IWM along.
Yeah.
Go ahead. Go ahead.
Yeah, I was going to say there's two other markets that I think are at critical points. One is crude oil around $85, and gold at around 1980, 1950. if those two markets cannot get above those levels, then I don't think their futures are very bright. The commodity index on Goldman Sachs went up to 600, which was resistance, and turned down. So if the Goldman Sachs index gets above 600, I would think that the crude would be above 85, and I would think that gold would be above 1950, maybe 1980, and then we could get off to the races. So what are you seeing on crude oil and gold that would either corroborate that view or debate it?
What was your top side in crude?
Top on gold was
1950,
1980 on
just
gold.
Now you were talking about with this turnaround, if crude oil can get above where?
85. The recent high.
That's where I think
basically.
it stops. Yeah, no,
that's where it did
I
stop.
think that completes. It is where it did stop. You're right. I think it might get up to 85, 65. It has an outside chance where, yep, if they push, we'll get up to 92. And so they might a little bit above 85, which is going to force all that flood. Okay, we're breaking, and they all come running in.
Yeah.
But
right.
what I can tell
from
point, what I can see here, now that's taking it from the high at 120 down to the low at 64-ish, right? So there's change on both sides of that. That what we've done is we've done an initial run down, and now we're doing a counter trend bounce, and so it's an ABC bounce. And yeah, to be honest with you, Jim, yes, 92 to 98 is possible. And I'm on a weekly chart. I'm on a weekly chart, so this is not tomorrow.
No.
So, but if you're looking,
but right now, where are we at trading
again,
at 80, 82 now? Where are we at now?
We're at 80, 28.
Oh, yeah. So 80 is looking a little bit far away right now.
Yeah. A little bit, but crude gets itself a decent rally going, and it's going to go. And to be honest with you, gold, you're right. Gold is having a great deal of problems. And I'd have to go a little bit further out, going to a weekly chart to kind of show that there is the possibility that it is just working through a very bizarre little correction here. But still,
it's held 1840 so far, right? 1840 been held.
Yes, it did. I mean, I think that on a futures basis, it's held 1900, and it needs to. I mean, it has support at 1902, and I felt today that they were going to go down there and smack it, but they didn't. But
that's a December contract.
The thing is, it's like what the question I think the question that we need to ask ourselves: what happens to gold if the dollar continues to put in a solid rally? What happens to gold if the dollar gets above 104? Then is it going to put in? Is this going to really drop gold? And if gold drops, and this is again on a weekly chart, I have support in gold at 1902, but that's not going to be very strong. If the dollar is just going to continue to rally, it's not going to be very strong if interest rates continue to just plow their way higher. And that being the case right now is just really got gold sitting there shaking in its boots. So we got 1902, and if a break happens there, I've got a weekly 200 EMA at 1883, and then I have fib support at 1824. And then I have the 200 SMA at 1807. All of those viable targets if this thing gives up the ghost.
Yeah, because my big parameters are about 1840 on the downside. If that breaks, Lord knows we could go $100, $200 lower for all you know. And then if it gets above 1950, 1980, I think something is happening. And then if something's happening, we could go above 2000 and 2075 and really get on the horse. And this is the time frame as we go into the end of the year where if it's ever going to get off on its horse, this is the time frame. And are they trying to weasel it down a little bit so people do give up, so they get short the market, and then sometime in September, October they start running it the other way? It's going to be interesting to see.
Interesting. And as a long-term gold trader, when there was the gold pit, the one thing I said that always used to believe and would talk about was that gold traders are famous for washing out the weak hands. Famous
Of
for
course,
it.
yeah.
Where you just walk in.
That's why,
one
again,
day
as long as
and
you're
the
above that
gold's down
1840,
100.
I got a lot of moving averages coming in at 1840, and in that neighborhood,
Okay.
plus or minus whatever. And so if they hold that, then this is just a bunch of blah 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 before the rally happens. And you know what? I've been noticing the M2 money supply. Last time I looked, I haven't looked in the last week or so, but M2 money supply seemed to have bottomed in April at minus 4.84% negative M2 money supply growth, and it's turned up. So I don't know if there's printing ahead of us, because there's no debt ceiling until January of 2025. And with the kind of people we have running Washington without a debt ceiling, that's kind of scary. Yeah.
What is the oh boy, look at them just go after this NASDAQ. You'd mentioned that. What's the conversation coming up in like this month or in September about lending?
What is that about the budget? Maybe
is the budget military spending,
or no? Or maybe I think it's something to extend something with McCarthy trying to say we're going to get a temporary bridge. That's all they got is temporary bridges. But as far as an absolute debt ceiling, January 2025 is when they're going to go over that. But I think there's something coming up. You're right, where they're supposed to kind of make another bridge for something. I don't know what it is. It's all nonsense down there. Anyway.
I mean, there's so much that they're just hanging their hat on, because we have to wait till Friday to hear Powell makes his infamous.
Yeah.
They're on vacation too, Jim. They're just in Jackson Hole.
Yeah.
Yeah. So I'm waiting for them.
Well, I'm in Woods Hole. So Woods Hole, Cape Cod is the opposite side of the country of Jackson Hole.
Exactly.
But we're both in holes. But we're both in holes.
There you go. So God. I just find it to be very interesting that everybody is waiting. When they continue, it is amazing. It is amazing to watch how it all plays out.
Right.
Because it's going against the grain.
Yeah.
It's going against the grain. And whether they're doing it politically, whether they're doing it in interest rates, whether they're doing it in gold, it all just nothing seems to is gyrating together here. And so this whole move in the NASDAQ is just
with the unemployment rate is extremely low. The wages are still rising, and the consumer is still spending with retail sales. So everything the Fed has done very little to slow things down, except in areas that maybe they don't want to, like commercial real estate and that office real estate in San Francisco and all that kind of stuff. But it's not slowing down John Q. Public, because he's just banging the credit cards if he needs them, because he's got the credit card debt over $1 trillion now. And so John Q. Public is definitely not being slowed down. And I noticed this morning XLY was up, which is the consumer discretionary ETF. Let
me ask you, what we have actually is just up a very small little bit. After having, 3 weeks of declining. Mentioning San Francisco. Yes, our commercial real estate is in serious trouble out here, and we continue to see a lot of owners walking away from their obligations, giving it back to the lender, saying, sorry, we don't want it, you can have it. And it just
the guy from Starwood did that in Atlanta. The guy in Starwood did it in Atlanta in a big building.
Wow. Okay, well, here's one from San Francisco today, where it's rolling over now, hitting in residential, and there's it's a beautiful tower. It's 700 and some odd units, apartment units, and supposedly, I don't know the exact date, but it was like 91% leased. They're walking away from it. They can no longer meet the obligation on a $389 million loan. So they're giving it back. So
this owner's equivalent rent is not going down at all. This owner's equivalent rent is not going down anything like they thought. And so, they can't get the inflation to sustainable drop unless that occurs. So I think they really do want a slowdown here. And this S&P, people earlier in the year were saying 3,400. I've got moving averages that are down there. So a reversion down there is not off the table as far as I'm concerned. And some people thought that October, I've been touting that the August through the end of October timeframe is a danger zone. And so far, obviously, we've lost 300 points off the high, so I'm certainly not that far off. And then could it accelerate further?
That's just the beginning. That's just the beginning.
Well, you need to break, I think, this 4340, and then maybe that 4,200 number, and go down and test the 200-day. If you go down into to the 200-day, and they can kind of hold on to that, I think it's around 4,100. Where's your 200-day? Around 4,100?
The estimate is 4,210.
Yeah,
4,210.
The 200.
Yeah.
Okay, because I thought I had it in the 4,100 about. Well, that was a month ago. Maybe it obviously moves. Anyway, so that would be another number that could be
a month ago it was.
As old Sonny Harrison. It was around 4,100, wasn't it?
But yeah, it was. Like you said, like a month ago. Yes, it was. But let me just say, let's go back to our original, what we always start with, and where do we think the S&P, and we don't necessarily have to say, what do I think is going to end up at the end of the week? Coin toss, folks, for the end of the week. Truly is.
But I think that how they react to NVIDIA is going to be the whole thing. Yeah.
Amen. Thank you for including that. But if I just take a look at what the pattern is telling me, the pattern's telling me that we're headed to an area that most people aren't going to think. And so you're right. 4,200 is going to become very important, because there's like, wow, we're going to go back to 46. And for a long time, there was a narrative that this was just a corrective decline. But I think that narrative is now getting washed away. This is Hurricane Hillary comes up through the West Coast. But if I just take a look at my initial fib support levels, because I wanted to go over these, because you had mentioned, what did you say? You had 3,500?
Well, I'm saying no. My moving average is down in the 3,200 to 3,400 area.
I have 100%.
But I mean, it's going to be it's going to be moving. It's going to be moving, so it'll get higher every month that goes by.
Sure is. I agree. But just to kind of do a little Fibonacci comparison to where yours are sitting, and mine won't move unless they go up and make a new high above 46.34. Mine will not move. So if I have a primary C wave going down, and that's just in its absolute infancy stages, then what is that? What are the numbers? And the numbers on the Fibonacci basis is that the primary wave C would be equal to the primary wave A at 33.28.
There you go.
And then and I would expect it to come in bigger. Yeah, I have super long-term support at 29.80. I'm not showing it here, but I'd have to go out, and then I'd have to go to my monthly maximum chart. And then if I'm putting in from its low to the high for what I'm considering, the high at 48.18 basis, or 48.08 basis, the future, from where this all started. And my data that I'm showing right now only goes back to 1983, but I can go over here to the SPX, and I got data that takes me all the way back to 1928. So if I go from the low in 1932 to the high in 2022, the initial drop brings us down to 29.80. So that would be the first Fibonacci support level that I would expect to be met on a long-term basis. And
now, one thing I wanted to add here is, I'm not looking at, you're looking at things through the Elliott wave here, and I am looking through some things like mathematically. So like moving averages are mathematical, and so one thing I look at is earnings and then valuation. So right now we're up at 20 whatever on the PE ratio. With rates at this level, more than likely, it's not impossible, we'd go down to 15 or 16. on the PE ratio if things really contracted a bit. And if you have $2 or $2.20 earnings on the S&P and you mathematically times it by 15, you're in that 3,000 zone. If you do it by 16, you're still in the 3,000 zone. So when I start talking about those numbers, A, I'm looking at a moving average that I use, and B, I'm using basic math on earnings on the S&P times a multiple that would make sense with money market at 5.5%. And I don't know that 20 is a sensible PE ratio with these interest rates at this high, going back to Buffett's talk about what? Interest rates are gravity to asset valuations and assets in general. So again, if the gravity is going to stay in a 5% money market or better, then we're not going to be able to stay at 20%, possibly 20 to 1 PE. And if that's the case and you go down to 16, then just think about what a 4% drop in valuations would do if it came accompanied by a contraction of earnings because people just slow down. That's the scenario that gets you into the 3,000s.
Yes.
You know, because some people, you know, probably need something to hang their head on mathematically to understand how the heck would we go down to that number.
It's just like one of our participants, Don, just mentioned fundamental analysis versus technical analysis. It's like, yeah, it's where we meet, and we're both coming up with the same response in terms of an area where the market may find support. But mind you, folks, when we're out there, I mean, I can't speak for Jim, but I'm speaking about what's going to take at least a year or more to get down to. And then from that level, we have a kick butt rally. And then then another year out, so we're talking 2025, we have another even more serious decline. So we're not out of the woods of anything. But I think that what I try to just show people or try to help people with is like, it's all very, very tradable. But you just got to, you know, but we've got to move away from that. Well, you buy it and you hold it. You buy it and you hold it. It's like, no, that's the danger zone, because there's going to be so much to do in between. You don't need to stand there and lose all your money while you're waiting for your money to come back to you. So I think, Jim, what you're presenting is an excellent gauge to show what people can do, or what, you know, how all of this can come together, how the fundamentals and the technical actually do match up. We come about it in a different way.
And the technical sometimes lead the fundamentals a little bit. But the story is if the technicals are going to say something, it'll be back, and they're going to be correct, then it'll be backed by a story.
Amen.
You know,
yeah,
but
that's true.
But the technical, you know, and it probably leads the fundamentals simply because people in the know place their bets long before the average Joe knows. In other words, you know, if the people in the know can tell that things are going to, you know, be going a certain way, they're not going to wait for it to get on the front page of the New York Times. Whereas the average person is not going to have that kind of information flow, and ergo, you know, he's going to be surprised when things happen, even though the guys in the know, a little closer to the heartbeat, are going to have a good idea, and they're going to place their bets well in advance.
I think that people also should try to get a more, I hate to say it, but rounded picture of everything. And I know you and I, Jim, have spoken several times about what I consider my pecking order. And what sits at the top will always sit at the top are interest rates. Whatever happens to interest rates controls everything else, because it's where you can lend money and what you're going to get to lend money and what you're going to get to have to pay to borrow money. And since we all live under that realm, so to speak, what happens to interest rates drops. The first thing that drops down are your treasuries and your currency. And then it drops down to the corporate, which is what all of our corporations, our companies. And last on that list are us folks. We're called retail. And so that's how it all flows back down. And so when we're looking at all these things and we're trying to see that, oh, you know, consumer credit, everybody's getting further into debt, but they're out there spending their money. It's like, yep, because we got a little bit. We got a little bit of money, you know, a quarter or a half year ago. Now we're spending it. But they're spending it, and because they have to, because look at home mortgages up over 7%. You're reading about that. You want to buy a new car, and if you can't go ahead and get that Ford credit only for the super qualified person at 1.9, you're going to be paying 9%. And you're going to be considered good. So there's just so much that kind of filters into this. And so to look at go like, well, hey, this stock's going to make all this money. It's like bull pucky. Because if it does, it still falls under the law of what things roll down. So that, I think, has also got to be factored in. And that's where the fundamentals and the technical match up. So that's a long way around.
Yeah, I don't know. We had we're getting close to 8% mortgage rates, and to think that real estate is going to be immune to that, just because it has been so far, I think that's obscene. Because again, the price of things just cannot go on unlimited to the upside, because the majority of America cannot keep up, and the Federal Reserve is very well aware of that. So they probably want to see a little tangible evidence of the cost of living coming down some, so that the majority of people can actually have a life.
Well, when you live in a city like San Francisco, that the only they can think is like, wow, we're going to make up all this deficit. So they start raising taxes. They start raising all the fees that get charged to us, the residents of the city. You get a ticket on your car. Suddenly, you thought it was only going to be $75. It's now $125. And those are parking tickets, my friends. Parking tickets.
Now, listen, I'm going to turn back over to the market. I want you to look at a couple things. On my work, Apple had a very much an important area around 175. It has traded under that, but if it starts getting back above 175, I would say that it could rally. So what are you seeing on Apple, which is obviously a bellwether? When it was up at 195, 198, we had a
no, I do not see that at this particular moment.
You don't see anything around 175 that could be? Oh, it is back above right now?
It's at 175. It's at 175.
Yeah, this is a big number. Yeah, this is a big number right around here, because we had a sell zone up at 190. Yeah. So you'll notice on your machine up around 195, 198. Look at your machine and look at the RSI. There was a divergence up there. Sell. And then when we come down here, I got a long-term average of 175 that it's holding. And again, sometimes on these averages, as you know, they'll penetrate them for a few days. But as long as it gets back above it pretty soon and gets back on the upswing, that could be the low point. So I would be very much looking at the 175 at Apple as a very good possibility. And then if you got a good report at NVIDIA and you're going into the Labor Day holiday, could you go from 173 or 4 up to 180? No problem.
I actually was going to say 182 to 185.
Yeah, and this is when you would take a look at short. And listen. This is when I go look at my short-term options and go a little bit out of the money, and I look to see what's there, and I see if they look cheap enough, and if it looks like my target's reasonable, then you shoot it, then you take your shot. And then if it does swing,
How far are we going now?
What is the 170? What is the 170? What's the 177 call go for Friday, or 176 call for Friday on Apple?
With this Friday, 176 call. Actually, you got 175, 177 and a half. 177 and a half is 84.85 cents. 84 cents. Yeah.
Which means if it popped to 180 by Friday for whatever reason, that goes from 80 cents to $3. Am I right?
Well,
and if you're wrong, you lose 80 cents.
Yeah.
Or 250. And if it doesn't, you lose 80 cents. Or what if you go a week more out? What's it look like out there?
Then we're looking at September
to the following
1st.
Friday.
September, the 177. Well, here you go. 305 to 310 for the 175s expiring September 1st.
Yeah. So they're looking for a rally going into the Labor Day. That's why the thing would be bid up more like that.
Yeah.
I mean, that would be that's what's telling me. Listen, that's what tells me.
Yeah. Well, they're paying 88 cents for the September 1st 180 call.
Okay.
So there's that 88 cents
pretty
thing.
cheap.
Yeah.
Well, like I say, when you're wrong on these things, you lose the premium. And when you're right, the premium can expand. So sometimes, and again, the market maker, when everyone's selling Apple at 173, somebody's buying it. And it's probably the market maker who's getting all this action. So he drops the bid. And once the bid is all filled up and there's not much action behind it, it can rise on its own, on its own volition. Just like when we're at 195, 198, he's taking all the buyers in, all the buyers. And then once all the buyers are all in there and the volume starts drying up, that's what the RSI divergence is all about. Bingo, you lose $20 before you can spell Apple.
Yeah.
And to be honest with you, that's a game that can happen more often than you think,
Right. And that's why I listen to what you say, because you didn't get the name options professor for nothing. So
yeah, and I've seen, obviously, do. I mean, if yeah, exactly. Oh, yeah, right. In other words, I hear what you're saying. This is a second language to me, but if I go to Athens, I don't talk Greek very well, right? In other words, not everybody is as fluent in thinking like this because they don't have the experience and knowledge on this stuff.
Let me just ask you. I mean, this is just we got a few minutes here. The zero DTE options, of course, are just like everybody loves them, everybody wants them, but I think it's just really the big boys and retail's continuing to get swallowed whole.
Well, like I say, it's like anything else. If I'm doing short-term options like this, I'll be looking at my 20-year graph, my 5-year graph, my 1-year graph, but I'll be focusing in on the 1 month, the 5-day, and the 1 day. And that'll give me what they call a basket of knowledge. And I get a vibe out of the basket of knowledge. And then, I look at what the premiums are going for and what the moving averages are doing. And then basically I try to come up with an idea from that. So basically, and of course, I definitely love the RSI divergence, which this is all my opinion, my view. You got 9 million people in America, they got all views. This is my view. And my view is that the divergence gives me an idea that something's running out of steam. And when it runs out of steam and everybody's already taken a big position in it, either down, like on Apple at 174, or Apple up at 198, these people are going to have to come out at some point. In other words, if you've been shorting Apple or you wanted to get into Apple, those are what they call natural buyers. Now, who's a natural seller down here if things stabilize and you hear NVIDIA's got a big report on Wednesday? And everybody who either shorted or got out. Well, straddles are good, except you have to obviously quantify what the premiums are, and then you got to factor in what do you think the volatility is going to be. Sometimes they're fabulous, and sometimes they're just, going to get, I mean, on straddle, your name's got to be Murphy if you pick the middle strike price. In other words, you buy a call and put it the same strike, and it lands right on your strike. That's God's way of saying get out of the business. You know what I mean? So, yeah, I mean, I like straddles, but I like anything that's at the right time. So, does it have merit? Sure. And when does it have merit? When you can buy both sides for peanuts, and one way or the other, poop's going to hit the fan. And it makes some sense. But, nothing works every time. Great. Nothing works robotic. Like I said, I've seen robotic trading, and, robotic trading, like these people go, 90% of the time this works. Well, they don't tell you 10% of the time that it doesn't work. Not only wipes out your original stuff, but it wipes out more. You know what I mean? So,
down if you're not careful. Yeah, it's just
you got to be,
it's a game that everybody wants to play. And like yourself, I just think, what I'm sharing today, these are my opinions, but guess what? I don't trade other people's money. I only trade my own money. So I'm the only one that's at risk. And I think we need to tell people, like you did at the beginning, it's not a recommendation.
No,
it's just my own opinion.
The big key is you have a discipline on your sizing. You have a discipline on your methodology, and you have some kind of a historical reason to have a confidence in your methodology. And then, sometimes, obviously good fortune comes in and might be one of the more major factors. You know what I mean? In other words, your system might be saying something, and all of a sudden there's an event that actually favors you or does not favor you, and it either helps your apple cart or it turns it upside down. So, all the figuring in the world is just trying to increase the odds, right?
Right. Wow.
So
the S&P is back above 4,400, Jim. And that's just kind of amazing because they took it
No,
from
like listen, I
44.08,
came into this.
dropped it down
I
to
did a thing before I
43.73.
left on holiday here, and I said 43.40. You want to buy it? You defend it against that point. And can it bounce out of there? Absolutely. And is it doing that? Yes. Same thing with Apple. You want to be a buyer down here? No problem. Make sure you can defend around 175 area, because this is an area where it could bounce. And again, we are going into a holiday. And my feeling is, going into holidays, people feel better. And when they feel better, they buy rather than sell. And of course, if they get some decent news, like out of NVIDIA, to call the dogs off a bit, maybe Powell gets out there and starts doing a little tooting about how, we've made a lot of progress on inflation, and make that sound like they're almost done. That might be enough to get a rally.
Yeah.
The truth is that this consumer is like a dope addict, and they don't seem to want to stop spending. And as long as they keep getting paid every Friday higher than they got a year ago, getting these guys to put their wallet away is not an easy task, apparently. So, it's hard to get prices. I mean, it's hard to get prices to come down when you still got to. Yeah, I mean, you still got how much of a wait going out to these restaurants? Come on, you got how much of a line in the airports? I mean, so we haven't really seen anything really slow down. They're hoping for some lag effects. Lag effects were supposed to be by this. It was supposed to be the first half of the year. It was supposed to be negative, right? That worked out well. And then they said the second half is going to be negative. We're already in freaking September, and it's not negative. So, I mean, when are we going to roll this thing out until perpetuity, or what?
I don't.
Now, Rick Reeder over at BlackRock says we're not going to know. Huh?
BlackRock says we're not going to know what.
Well, this guy Rick Reeder was saying, we may see a recession and people won't even know they felt it. So, he was acknowledging on Bloomberg that things could slow down, but they may not slow down so measurably that people really feel it that much. You see what I mean? So he was more from a moderation standpoint. Yeah, that's what's going right now. So he's talking the current situation. Yeah.
Right. I think when we have stocks like NVIDIA, when we have stocks like Microsoft and Meta that can flip and fly $5 to $6 at a clip. I mean, what we're really kind of paying attention to, that I don't think other people are paying attention to, is how overvalued our markets are. These are not unusual moves for stocks that are priced so over. So our evaluations, I think, really what comes into play here. And how do we want to evaluate, and what do we want to use to evaluate it on? We were basing it on a zero interest rate policy. What are we going to do now when you got to base it on 5 and 5.25 to 5.5? Which, by the way, does the retail person go and look at what the T-bill auctions are coming in at now? They're now 5.25, 5.5, but I'm seeing the high end of that start to be noticeable. So what do we do now? Are we going to have 5.5, 5.75? When I start to see the 10-year note bumping its head above 4 3/8, what happens next? 4.5 on a 10-year note. When you start to see the 30-year bond bonking its head above 4%. Now, granted, it's a futures market, but still, what is that telling us? Is we got nervous people, we got not nervous people. We're trying to factor in all of this refunding that the Treasury just did, and they're having a problem. Are we factoring in that China is selling our treasuries because they have to? They can no longer take the loss. Because who lent us all that money during our zero interest rate? Well, who loaded up on that, folks? And now they're back selling it, and their own economy is to the skids, heading to the skids.
Yeah.
So
well, it'll be very interesting. Like I say, it'll be very interesting how we get through the time frame I mentioned, which is the August through the end of October. And the first bit of it, obviously, in August here has been very bumpy. And the question is, what will September and October look like? And what it could look like is, a little bit of a bounce as we go into September, and then maybe another rendezvous down. But I tell you one thing about me, I am not a fighter. So when these things say it's going to go down, I go with it. If I start getting the signal that it's going up, believe me, I'll change my tune quicker than change whatever. You know what I mean? Because one thing you can't do is fight the tape. So right now the tape has told me down. Huh? Yeah, no, the tape told me 4,600 neighborhood down. It told me 43.40 at my stop. I certainly wouldn't be shorting it down here by any stretch. If anything, you're covering your shorts here and you want to take a bite for a bounce, this is the neighborhood. But the point is when I get back from holiday, I think we'll have a pretty good idea of what kind of bounce you had and where it looks like. And then basically I'll reassess. But, it's very important to do things at the right time. If you do things after things occur, then you can get chopped up. And if you do things when the price of what you're doing is not very correct, you get chopped up. So you have to be kind of precise on your timing and the price. And then you hope you're using your sizing, asset allocation correctly and all that. And then hopefully you come away with some winners.
You're right.
I was gonna say here, because I wanted to just, I was gonna sign off and let people know how they can get a hold of me, and then basically you could let them know what you're offering right now. As far as Option Professor is concerned, again, we work with RSI divergence, moving averages, our moving averages that we use. There's 9 million moving averages. We use the ones that we use. And then, of course, we do reversion to the mean, where things are way away from the averages and they're going to come back toward them. So, and we use short-term options and that type of thing that we try to look at, and we share our opinions. We don't give advice to anybody. We share opinions and our views. So you go to optionprofessor.com, but better yet, shoot us an email and say, hey, Jim, I'd like to hear how you work. I'd like to see what you do. I'd like to show you what I'm doing and get your opinion on some of the things I'm doing. And you go to optionprofessor@gmail.com, and we'll respond, and we can try to give you a hand. Okay? Michael, please let everybody know how to get a hold of you and what you're offering, and then basically David will take it over from there.
And Jim, you had a fabulous vacation.
I know. I got to learn Italian and French. I got to learn Italian and French. There you go,
along with the Greek. Now you're talking.
I could run into a Greek. Yeah, you're right. I could run into a Greek.
Yeah.
Hey, listen, I'll tell you what the bouillabaisse tastes like in Marseille, because that is the birthplace of bouillabaisse. You know?
Yeah, have a great holiday.
All right, you guys. Thanks a lot, Michael. I'll talk to you guys when I get back.
Thanks, Jim.
Okay. And again, folks, I'm Michael Filighera. I am with Traders Helping Traders and Logical Signals both. So my websites are tradershelpingtraders.com, logicalsignals.com. And I do have 2 channels on YouTube. I produce a daily update. It's an Elliott Wave update, and I cover the S&P and the NASDAQ. On weekends, when time permits, I also do a Eye of the Storm podcast, which I will then give a technical update, which could include the interest rate markets, the equity markets, the gold, silver, the dollar. I try to do all of that, but that's always time permitting. Right now, the market is tending to just demand all of my time. Yeah, all class. Thank you. So if you would like to get a hold of me, please feel free to drop me an email. Michael at mjf1partners.com. The other thing that I also do offer is I have a trade room. And in that trade room, we meet every day for approximately 2 hours in the morning. And we are day traders. But I'm starting to gather some interest from people that are basically more position, a swing trader, so they're holding on to things for a couple of days, and they're just looking to pick up some additional timing type things to go along with that. And so that may or may not work out, but I meet every day. It's in the trade room. You can find on Traders Helping Traders or logicalsignals.com. Both you'll be able to find information, excuse me, on the trade room. I think it's great if you're trying to pick up some skills in day trading, or maybe you're looking to get additional financing or funding for an account. We have a lot of people that are working Apex accounts, and that's so that they can just get more funding to trade with. Shall we do that together? There's quite a few things. Actually, let me hold on, Don. Nope, it's like this. Oops. You forgot the number one. So, and thank you, David. So it is time's up. I'm going to turn this over to David. Thank you very, very much. And everybody, please listen, because next week I think is even going to be more fun. Thanks, David.
I was a second late with the email address.
Yeah.
Anyway, all right. Yeah, thank you, Michael, and thank you to Jim. Great discussion from you guys again. So just want to the next big thing coming up, I want to remind everyone about is the Fibonacci and Elliott Wave 2023 conference. That will be September 5th, 6th, and 7th. And of course, Michael will be a presenter on there. He will, let's see, you're going to be on Wednesday, the 6th at 10 a.m. Eastern time. So you'll be the opening presenter for Wednesday. So again, that event is September 5th, 6th, and 7th. We'll have eight presentations each day, all about Fibonacci and Elliott Wave trading. And of course, you can just go to TimingResearch.com at any time those days and get instant access to the room. And then a week from today, on August 28th, 1 p.m. Eastern time, we will have the Crowd Forecast News Show as usual, and Michael will be moderating it, but it will be both the 400th episode and the 9th anniversary episode of this series. So exciting milestone there. And like I said, Michael's going to be back to moderate, and we're going to have some old friends joining us that haven't had a chance to be on for a while. So that'll be AJ Brown, Dave Landry, and Mike Pisani. So be sure to join us for that. Again, that'll be 1 week from today. Okay, yeah. Someone just said in the comments, congrats on the shows. Keep going. Much appreciated. Thank you. Michael is one of the best gentlemen and scholar market participants. Yeah. Yes. Yeah, we were talking before the show. Michael was a guest on the second ever show back in 2014, and has been a regular guest ever since, and a great guest, and always has lots to contribute. So yeah, happy you're going to be able to moderate next week.
For just leaning on me a little bit today and say, hey, can you come in? And I'm like, sure can. It's always fun. It's always fun, folks. So I enjoy it. So thank you very much. I look forward to next week.
Yeah, definitely. So yeah, so thanks everyone.